The surge in artificial intelligence has contributed to market-beating results for numerous tech stocks, such as Palantir Technologies. Palantir shares increased 34%, but the S&P 500's 10% first-quarter return is still respectable. Over the past year, its shares have returned 172% since March 2023, significantly outperforming the benchmark index. The S&P 500 is up almost 29% in the interim. Many investors were probably taken aback by the astounding profits since they thought the company formed by Peter Thiel would suffer due to potential recession and government gridlock over the debt ceiling to pressing demand. But Stephen Guilfoyle of This Street Pro saw an opportunity where others saw risk. In April 2023, he purchased shares at a price below $10, which made it possible for him to profit handsomely from the soaring optimism surrounding AI spending. Guilfoyle has revised his analysis and stock price estimate in light of Palantir's shares' meteoric rise and current price of almost $23. Guilfoyle bought Palantir last year because of the company's solid, debt-free balance sheet, better free cash flow, and more obvious route to profit growth. Guilfoyle's prediction proved to be accurate when OpenAI's ChatGPT launched in December 2022, proving to be a windfall for the corporation. Research and development is moving at the fastest rate since the 1990s internet age due to a surge in interest across most industries in employing AI to process, understand, and generate new insights from siloed data. AI systems are being used by banks to price products, assess loans, and manage risks. Therapeutic companies are investigating its potential for forecasting clinical trial results and therapeutic targets. Producers are assessing whether it can increase output and quality. Retailers may be able to predict demand, control inventory, and reduce theft with the use of AI. Due to the seemingly endless possibilities of AI, numerous businesses and governments are turning to Palantir's extensive knowledge in data management and security for assistance in developing and implementing new AI applications. Palantir's origins are in its assistance to the U.S. government in developing counterterrorism technology. Governments are still aided in these efforts via the Gotham platform today. Large businesses can also take use of its solutions for managing, interpreting, and reporting data across corporate and cloud networks. With its deep data experience, it is in a perfect position to use its AI platform, AIP, to assist customers in designing massive language models and other AI solutions. CEO Alan Karp stated as much last summer. The demand for artificial intelligence platform, AIP, is unlike anything we have seen in the past 20 years. More than 300 more firms are in talks with us to implement AIP within their own frameworks. These organizations are all looking for a safe and efficient way to modify the most recent large language models for usage on their proprietary data and internal systems. Karp seems to have been right to be optimistic. In all three of the previous quarters, Palantir's year-over-year sales growth has surpassed 20%, and in all three, the company's profits per share growth has been in the double-digit percentage range. The fourth quarter saw a 21% and 16% increase in revenue and earnings per share to $736 million and 9 cents, respectively, over the prior year. Analysts on Wall Street believe Palantir's earnings growth will continue. Earnings in 2024 are expected to climb by 34% and 17%, respectively, to 33 cents and 39 cents, according to average analyst projections. Guilfoyle's initial target for the price of Palantir stock was $12, but he raised that goal to $18 in June of last year, $20 in July, and $22 in August of the same year. The price of shares surpassed $22 in February and peaked at $27.05 in early March. They have since dropped roughly 16% to $23 since then. Palantir's retreat, in Guilfoyle's opinion, might be opening up yet another positive scenario for investors. Guilfoyle recently commented, "Palantir is on sale, and I'm buying for future generations. Palantir is still one of my top 15 long-side investments. The primary criticism leveled at Palantir is its valuation." Guilfoyle acknowledges that the company's shares have an extremely high price-to-earnings P/E ratio and are not inexpensive by most standards. According to Guilfoyle, The stock is trading at 74 times future earnings, which are likely a little less currently, 25 times revenue, and 15 times book. Tech companies are recognized for having faster growth rates, which leads to greater market prices. Nevertheless, Palantir's P/E ratio is far greater than many other businesses in the industry, as two other beneficiaries of AI stocks, NVIDIA and Advanced Micro Devices, have forward P/E ratios of 38 and 56, respectively. Guilfoyle believes Palantir has enough advantages, though, to warrant a higher price. It boasts a fortress-like balance sheet and significant operating cash flow, in his words. Over the previous 12 months, operating cash flow topped $700 million. Additionally, its current ratio of 5.5 indicates that it has sufficient financial strength to seize the AI potential. This ratio measures the company's ability to pay short-term creditors with short-term assets. Guilfoyle predicts that since the trend in AI spending looks to have several years ahead of it, shares will rise. I have been conducting financial modeling and forecasting for Palantir stock. Based on one estimate and one model, I have predicted that Palantir stock price will soar to unimaginable heights that you will not believe. I will share this scenario with you, but I will also share with you more plausible scenarios for Palantir stock price in 2030, in addition to that shocking scenario that you will probably not believe because you will probably think it is not very likely and not very probable. Now that you know where I'm collecting that information, you can assess for yourself the likelihood of that extraordinary price gain. Without further ado, let's dive into this fascinating analysis for Palantir stock. As a result, you are undoubtedly already aware that Palantir's stock price has skyrocketed since January 2023, when it last traded for $23.10. Nevertheless, the business is a top performer with bright future possibilities. Palantir's long-term earnings per share estimate is impressive. Wall Street analysts who track the firm's stock anticipate that it will grow its earnings per share by 85% annually over the next 5 years, which is a great growth rate for any company. Therefore, I'm not sure how practical that is. In fact, I believe Palantir is growing at a very unrealistic rate at this point. It would be more likely to expand at a rate more in line with its projected 21% earnings per share growth for the upcoming year. But I'll show you where the stock price value may be with this 85% growth estimate from Wall Street analysts, so you can judge how likely it is for yourself. I've already told you that I believe it's extremely unlikely, so allow me to share that with you. In the event that Palantir's earnings per share increase by 85% annually through 2031, using the PE forward ratio for 2030, the stock price might reach $993 per share if the PE ratio stays at $61.58, and earnings per share are expected to reach $16.13, which would be the result of 6 years of growth at 85% earnings per share, or $16.03 in 2031, $993 per share by 2030. As I previously mentioned, these are startling figures, especially in light of the fact that Palantir's stock is now trading at $24 per share. That would be a nearly 50x or 40x increase from where it is currently. I believe that scenario is extremely unlikely, and one of the factors is going to give either a decrease in the price to earnings multiple, which I don't think will happen, or a skyrocketing valuation if Palantir earnings per share grow at a rate of 85% year over the next 6 years. Investors will love the stock, and they will want to be a part of a company that is growing earnings at 85% year for 6 years, which is a very difficult feat. And if you succeed in doing that, stock investors will swarm into your company and fall in love with it. Even at $23.10 per share, Palantir stock investors who hold the stock for 6 years would still have received an excellent return on investment. Of course, Palantir stock investors would prefer the other scenario, in which the stock price increases to $1,000 per share. But again, I don't think that scenario is very likely because growing earnings per share by that magnitude for those many years is unlikely because, if you grow earnings per share by that level for even 2 years, competition will swarm your industry. Competition keeps a close eye on your business, and when they see that you can produce results like that, they will jump into it. Even if they can't match you in terms of product quality, they will take market share and make it more difficult for you to grow your earnings because you will have to compete with more players, especially in an industry like this one where entry barriers are low. This means that competitors will enter the market and offer comparable products, even if they aren't as good as yours, which will hurt your marketability. These will make it more difficult for you to charge premium prices for your product because buyers will see it and think, "Look, we know you're the best like we know you're the best. We're not saying anything about that, but you're charging us, let's say, $100, and your competition is charging $65. We know you're the best, but that your competition is a more affordable option. We don't necessarily need the best. We just need something in this area, and we'll go with your competition because they're significantly less expensive." Palantir will then have to choose between keeping its premium price and lowering it, so that our rivals are unable to gain market share merely by giving a lower price. Should they choose to do so, this will negatively impact their profit margin and earnings per share. In the long run, it's unrealistic to expect any business to grow earnings per share by 85% per year for 6 years. I don't have that research in front of me, but I wouldn't be surprised if it hasn't been done previously. So there you have it. I gave you that shocking price prediction for Palantir stock. If they don't lower their price, they're going to lose market share, which is going to hurt revenue, which is going to hurt earnings per share anyway. In conclusion, the future of Palantir stock presents an intriguing landscape, with potential for significant growth and innovation in the coming years. While predictions can only offer a glimpse into what may lie ahead, it's crucial for investors to conduct thorough research and analysis before making any decisions. As we approach 2030, keep a close eye on Palantir's developments, market trends, and industry dynamics. Remember to like, share, and subscribe to stay updated on all our latest insights and predictions here at Investing Tutorial. Happy investing!